Speaking of the markets, let's get to our next big conversation. Market veteran Manish Chokhani says he's very cautious in the infra space as well as in the industrial sectors, as these are not typically high return areas. Speaking exclusively to CNBC-TV18, Chokhani mentions that he is hopeful that financialization and equity asset reallocation trends should last for decades. Listen in to excerpts of a conversation with him.
Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then, because we're a fairly large company. So it needs a $4 billion PAT, profit after tax. To get to a $4 billion PAT, just for context, today TCS with 6 lakh employees makes $6 billion. So is this possible? How will they do it? Will they add more lines? I mean, Amazons of the world have done it. They started somewhere and they ended elsewhere. But if you're taking that bet, your time horizon has to be that, or your return expectation has to be that much lower. And that's the sort of stuff going on over here.
Got that. I want to talk about leadership in this bull market as well. And we'll get back to what to do and advice for investors a little later. So PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But we were defense, etc., right? That part, it looks like we're starting to rotate. People are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate. And then the excesses which happened in that period made them complete pariahs. So if 4 years ago, we were on a show and we would, Ramesh and I remember, we would talk about PSUs and everyone was like sniggering, like, what's wrong with these chaps? But because the correction had been so steep, that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good. So that rate of change is so dramatic that that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So. And people are shy of doing leverage after, again, the last cycle. And the flip of it, sorry to just complete, the leadership of the last cycle was all the high-quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
retail.
even, and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years. Again, great companies. But it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very bullish.
And financials, right? I mean,
so, look, I've been presenting for years. I said there will be 4 big things which will happen in this decade in India. When you're expecting a melt-up, obviously, you get ready for it. The first, obviously, was people will come and get excited about financialization of India, and we were coming off, remember, the financial cycle. And not to say that you want to be in those same stocks which led the last cycle, and hence we had all these PSUs and stuff, and the so-called corporate banks, which have actually given staggering returns even now. The second theme was that India will have to privatize a lot. And that privatization theme, whether it's airports, ports, railway, roadways, it's basically that whole make in India, where we are taking over what the government used to do and we will do it better and faster and cheaper. That was theme 2, which has played out really well. 3 was you knew the advent of these platform plays and digitization will come. And indeed all the Zomatos and the Nykas and all played exactly into that theme, which have also done remarkably well. And the 4th was that people will come to India. Why? For consumers. And the consumer discretionary will be the place to be, not the FMCGs of the past. And those also have done incredibly well. So whether it's to buy home improvement products, consumer durables, travel and tourism, and so on. So 3 of the 4 have done remarkably well, and I suspect are discounting a lot of the future.
Yeah.
And you have to be, like Mark Faber used to famously say, in the beginning of the bull market, the entrepreneur has the vision and the investor has the money. By the end of the bull market, the investor has the vision and the entrepreneur has the money, which is happening in some places already, as I mentioned. Yeah. So of those 4 big themes, I think financialization has still not fully played out.
Right.
We've participated very happily in the capital market themes, which are fund managers and so on, and the ancillaries, the exchanges and so on. But the banks, which are looked on with a very sort of, as if the NPA cycle has already started coming and it will be a repeat of the previous cycle where it blew up or margins will collapse, deposits will never come back. I think the narratives are a bit misplaced over there. And therefore, it's a question of taking an asymmetrical bet with a time horizon. And of course, a return expectation which is not as spectacular as we've already had in the last 4 years.
So banks and financials are...
I think that's the
comfort
center point.
Kind of zone? I mean,
comfort and, look, eventually, where is wealth going to be parked? Is even today the issue in financials, which everyone tries to justify for fundamental reasons, I suspect is a lot more technical. The financials as a category must be, to my mind, 25% of India, which is $1 trillion. And to take $1 trillion market cap up, it takes a lot of money and demand.
Absolutely.
So if and when this money and demand comes from overseas, and when the locals wake up, that we don't necessarily think that 20% return is so easy. And actually, you can make very safe, go-to-sleep kind of 15% returns in financials. That may be the time for their moment in the sun. Having said it, they led the last bull market. So it's not like the bull market ought to come and trigger it off immediately. So it's question of what your time horizon is and what your return expectation is.
Okay, well, that's an excerpt of the conversation, but you can catch the full one with Manish Chokhani at 11:30 a.m. Today. And that's going to be an interesting one. We sort of go all over and discuss a lot more sectors, examples from the past, and essentially advice for investors as well, I think. Very, very nicely put by Manish. So that's